there is one stock which has been focused on the back of earnings, that is Paytm, up around 2%, and it was a stellar quarter for Paytm for the quarter gone by. The fintech major reported its first operationally driven profit since listing, aided by strong growth in lending and drop in expenses. Paytm also announced changes in its board of directors. The group CFO Madhur Deora to retire as executive director at the next annual general meeting. My colleague Varun is joining with all the details of earnings and what is expected for Paytm.
Paytm has reported good set of numbers, no doubt. The overall profit, this is the first quarter that the company has delivered a profit of around 123 crores, and also the company has guided for good EBITDA growth going ahead. If you look at brokerage houses, even they are saying that the overall results of the company was good, and majority of the brokerage houses have actually raised their price target. But yes, some have also downgraded the stock. Now, what's the reason for downgrading the stock? Basically, if you see, most of the positives are in the stock, and the stock has seen a good run up in past few days, and that's the reason there are several broking houses who have actually gone ahead and downgraded stocks. First, let me tell you about Motilal Oswal. They have a neutral call on the stock with a price target of 1025. They have raised the price target after the results from 1000 to 1025. They say that the overall operational beat of the company was basically because of the cost control measures that the company has done, which has resulted in the overall operational profit to show a very good growth. Also, they say that it's an inline revenue for the company, and also the disbursement commentary for the company has been very good. The contribution margin has been around 60%. This is also because of the overall cost control that the company has taken, and they estimate 30% CAGR disbursement in FY25 and 28 for the company going ahead, with the take rates to improve better going ahead. Also, you have other broking houses like Jefferies. They have upgraded the stock from hold to buy, and they have raised the price target from 900 to 1,250 rupees. And also you have Citi. They have raised the price target from 975 to 1215. But you also have CLSA, who have raised the price target from 870 to 920, but they have reduced their overall rating on the stock from hold to now reduced. Now, the basically reason to cut the rating on the stock is because the stock has seen a good run up in the past, and the stock is now trading about 1000 rupees, and that's the reason some of the broking houses have reduced the overall rating. But yes, after the results, they have raised the price target, and that's the reason you're seeing initially there was an uptick in the stock, but after that the stock is actually trading in red today.
All right, Varun, but then let's listen in to what the management had to say about the recovery in personal loans.
It is not the agenda. It is rather investing in a few more line items that we believe are long-term growth. So we are not actively pursuing cost cuts, while I'm definitely pursuing whatever is not necessarily drop it out of the window. Where we are, obviously, if you read the earning release, we have pruned out every word which included EBITDA before ESOP, PAT before ESOP, or anything before ESOP. Next quarter onward, we will stop giving the ESOP line, and it will be only the employee cost, so that we are maturing towards absolute complete employee cost, including EBITDA or PAT, where the ESOP cost is the cost to the management. So there we go. No more adjusted anything.
So that was the review after the results of Paytm, as well as the Concall key takeaways coming all the way from the management. Moving ahead.